Sezzle surpassed the 1 billion market cap, surpassed 1.2 billion. In last quarter, you had 2.6 million active customers. Back in 2022, a financial journalist from the Financial Review wrote about Sezzle losing 96% of its market cap.
No one was using us. We tried the most ridiculous thing. He recommended, like, hey, maybe you should think about fundraising in Australia. And he's like, by the way, the way to fundraise in Australia is to go public. And everyone in the team thought I was crazy. Everything was just crashing in our space, especially buy now, pay later. We went from 580 employees worldwide to about 240.
Why now Latin America? Good morning and welcome to English Breakfast with Pablo Miller. I'm your host, and today I am delighted to welcome Charlie, the CEO and founder of Sezzle, an industry leader in the buy now, pay later space. Charlie, you are our first ever guest, so thank you for joining and welcome to Bogota.
Thanks for having me.
So Charlie, as of this Monday, Sezzle surpassed the 1 billion market cap. We were just having lunch an hour ago and you surpassed 1.2 billion. In last quarter, you had 2.6 million active customers, 1.8 billion active merchant sales. Life is looking pretty good. However, this is a remarkable achievement, but I understand this is part of a turnaround that could potentially be studied in business school. Back in 2022, a financial journalist from the Financial Review, Tom Richardson, your best mate, wrote about Sezzle losing 96% of its market cap. And you personally lost a 900 million net worth paper value. Many people wrote you off and also Sezzle. Today, as part of this series, we want to talk about you. We want to talk about what made Charlie able to have this amazing turnaround with you and the team, and also how the strategy of having a borderless workforce was also part of it. So let's go straight to you. Tell me a little bit about your background, where you're from. Let's get to the beginning.
Sure. Well, I grew up fifth kid out of six. I think that's actually an important part of the story. My parents, and we were probably lower middle class. My dad was an immigrant, which I think is actually an important part of the story. Came to the U.S. from Palestine with, I think around age 25 with nothing in his pocket. Raised six kids that went to university, and they've got a retirement home now in northern Minnesota and in Arizona. Like, it's the American dream. But I grew up in that sort of an environment. Went to university to study mechanical engineering. And then after that, took a job in computer science. I was, basically a nerd. I would build computers and tinker in software, and went right into software development. And that's where I started to kind of get an entrepreneurial mindset. I was tinkering with building like little projects here and there, like almost like a little Dropbox once that I built. But I didn't know the first thing about monetizing, or there was no one in my family that had built a business. And then I went to business school after that. Absolutely loved it. And that's when things started to change, at least for me, in terms of the journey towards entrepreneurship. Out of business school, it was the global financial crisis. It was 2010, almost impossible to get a job.
Who turned you down?
Everyone, basically. I mean, I couldn't even get an internship. Between the first year, and it was a 2-year program. Between the first year and the second year, I couldn't even get an internship. And then I started to realize.
Were you that bad at interviews, or you just didn't even get an interview?
Well, I was probably bad at interviews too, because I didn't do a lot of interviewing. But it was really, actually the class before us, the majority had their jobs revoked, their offers revoked. Wow. That's how bad of a time. I mean, people haven't experienced that for a while, but at that time it was really, really bad. And so I'd always been kind of tinkering with entrepreneurship. My cousin and I had been talking about it. I was going to business school and learning a lot about business. And I was talking to my cousin and saying, maybe we should start something here. And I kind of viewed that as like the push out of the nest.
Did your cousin have any experience in business, or?
Well, he was an investment banker, but he'd never started a business either. And so we just decided that was a good time to do it, because I could basically, in school I was kind of starting our business. It was a company called Passport. Yeah. We built mobile payment apps for parking in the end. That's not where we started, but that's what we did in the end. We wanted to enter the parking industry because I knew it. That was my first job, was in parking. And so we launched Passport out of business school. I moved on to Charlotte for us to build it, and basically learned the hard way about how to build a business. We started with the wrong idea. We got into the industry. We learned what was working, which was mobile payments. We mimicked the leaders. And
who were the leaders at the time?
One was called Park Mobile, and the other was called Pay by Phone. And
what problem did you see that these guys had? Well, kind of, you wanted to build a product that was better than theirs?
Well, at the start, they really didn't have very many problems, quite frankly. We were really just, our original idea was to build hardware in the parking industry, which is a bad idea. And we realized how capital intensive it was, how difficult it was to do. So we were basically just scratching and clawing. We had to do something that would work. And our view was we can get into mobile payments pretty cheap because it's just build software, put up signs and stickers. So pretty low capital investment. So it was almost like a had to kind of a move.
And back in the day, I know in the UK, for example, we had these kind of funny looking meters that you need to put like loads of coins and then you get a ticket. Was it the same in the US?
Thing. Yeah. Some of the US has started adapting towards paying with card.
Yeah.
But I remember Boston when we installed Park Boston, which was one of our big installations. When we went to Boston, everyone was paying with coins. But people had buckets of quarters in their console, their middle of the console of their car just to pay. And I was like, well, these people are going to love our app. And they did. People in Boston love Park Boston.
And you were how old at the time?
I think I was 32 when we started the company.
Okay. And how did you fund it? You know, how did you get by?
We basically on a shoestring budget. I think a lot of entrepreneurs have to be ready for that. Like I tend to recommend people against entrepreneurship unless you can basically devote all your life to it. Like if you have a family and your family's dependent on your income, I would recommend against it. I had a lot of support. My family supported me, and I was willing to live on a shoestring. I didn't care. So like when we started the company, I still remember I called it the Sipper. I had a 1993 Honda Civic. It was worth nothing. I called it the Sipper because it sipped gas. It didn't cost me anything to maintain it. And I lived in the office. We rented a house that I lived in, and our living room was the office. And the only reason we changed is because we won the city of Chicago on our first big contract.
Okay, talk me through how this 32-year-old broke with not a lot of experience wins a contract with the city of Chicago.
It takes time. So basically step by step by step. So our first installation was, I think, the city of Ocala. No, actually our first was Park Select out of Wilmington, North Carolina. So a small operator, they managed like 20 lots. We won their business primarily because they were upset with Park Mobile and Pay by Phone. They didn't respond to their requests. And we're like, hey,
horrible customer service.
Horrible customer service. And so we had an app that we thought worked really well. We got Park Select as the first customer, and then you create a reference, and it's step by step by step. So after then, we won city of Ocala, Florida. Then we won Asheville, North Carolina as like a stepping stone. And then we realized what was missing in the industry, which was, it's kind of getting in the weeds, but white label. We were able to build the infrastructure and allow the city to make their brand on the forefront.
Amazing. But you were the infrastructure behind it.
Yeah, we were the infrastructure behind it. And then we also did a wallet system where people could fund, like say $20 and draw it down incrementally from their balance, because payment processing on very small dollar transactions is very expensive. Yeah. So the wallet system also saved operators a lot of money. So that also won us a lot of business. So it's basically like learning from the customers and growing the customer size.
Building the product for the customer, their pain points.
Yep.
Give me some metrics. So once Passport was getting going, because I love to understand, because I know you got some funding, you know, you started scaling, but when did you see that you had product market fit, and when did you start going to investors?
Well, we started right away going to investors, but we had no traction.
The hard sale.
People, which is healthy, I think. It's all iterative. But we also learned a lot about what investors to go talk to. Like early days, we were talking to investors that would never in a million years fund us. So we were basically wasting their time and our time.
But you still managed to get in front of them.
Yeah, we still managed to get in front of them. So, but then I learned, you have to reach the right investors at the right time. But when we really started to really kick in was, I think, city of Omaha, Nebraska. We did our first white label. So it was Park Omaha.
Okay.
And it was our infrastructure. Then Chicago had an RFP. We told them about Park Omaha, and they're like, that's exactly what we want. And we're like, that's great. And so those were like the big stepping stones. Like city of Asheville was a big win. Then Park Omaha, with our first white label, and then Park Chicago. And then once we had Park Chicago, it was like.
I always say this, and I've built a couple of startups from the talent side. And when I meet the founders, they always say you need one core client to be your sponsor.
It helps.
That gives the references, gets momentum. Yeah. And that is always the same story when you're building out a product.
Totally.
Right?
And it's also incremental. A lot of people, I think the reason startups exist and this world exists is because a lot of big companies are too impatient to, build from the ground up. And it really is just stepping stones, slowly working your way up. And then all of a sudden people I remember this one moment. I was at Money 2020 after I left Passport. I was at Sezzle, and I was in a Starbucks, and I was just sitting on the ground because it was so packed. And a guy from Wells Fargo was standing next to me on the phone. And he's like, I think I just won the Passport business. And I'm thinking to myself, 2 years earlier, we were asking you to be our payment processor. You didn't even want to talk to us. And now you're at Money 2020 telling your colleagues at work that you think you might win the business. And I was like laughing because I was obviously a co-founder of the company, so I knew what was going on. But it was just like amazing to me that people can't, they don't grasp onto that things can grow at a pretty rapid rate once you catch on.
Yeah, once you have the momentum, I always say this is about kind of taking the heat and the pain, and then when the momentum comes, embrace it and go for it. So what happened at Passport? What was Wells Fargo sounds lovely, but what happened?
Well, that was a little bit of a tough story. My co-founder and I, who was my cousin, makes it a little even tougher. We basically had disputes. Yeah. A lot of disputes. We were like the unhappy marriage in a way. We successfully built the company. You were the techie, he was the business guy? Or? Yeah. We successfully built the company despite arguments and debates, but eventually he went out with the board and I was essentially pushed out of the company, which was tough because we were starting to take off at the time. Goodness. And they viewed the best way to settle that was just to push me out of the company, which really was a tough moment for me personally and professionally because things were finally starting to take off. But so it was just the moment momentum started. Totally. Life was looking good. Totally. And they just, they thought they need to start layering, bringing in kind of like professionals? Or? I mean, I wasn't part of the conversations, obviously. So I don't know exactly what they're talking about, but I knew that I wasn't part of the picture for them. So I was, basically pushed out of the company and, which is, fine in the end because it basically helps. What doesn't kill you, it makes you stronger. Absolutely. And that's basically the way I kind of viewed it was. It doesn't kill me, it makes me stronger. At the moment, really sucked. No doubt about it. And before we move into the Sezzle bit, I just want to understand from a personal level, kind of the entrepreneurs listening to this, how did you get up the next day? How did you kind of manage your anxiety, your disappointment? I don't know. Maybe I'm built a little bit different. I don't know, but I just got up and started working on the next thing. There was no break. So next moment I started thinking about the next business to launch. And that's when, obviously, the beginnings of Sezzle. So talk me through that. When did you kind of see, when did you first learn from the buy now, pay later space? And where did you think that you could build a business there? Well, actually, just like at Passport, we had the wrong business at the start. At Sezzle, we had the wrong business at the start too. So the moment that break happened at Passport, the next day I was working about building the next company. I actually started brainstorming with a guy I knew I always wanted to work with, which is my co-founder at Sezzle, Paul Paradis. Yeah. So I reached out to him. We went to business school together. And so I reached out to him and started talking about the next ideas. And what I wanted to do was stay in payments, but leverage payments to go into a bigger market, which I viewed as retail. Yeah. And so we started talking about ideas for retail. The idea we had was wrong. It was doing almost like a Venmo for checkout, using your bank account to pay. Because for merchants, a lot of the problems merchants have with payment processing is cost of processing. Yeah. They hate processing fees. We had the wrong idea though. So, but anyway, we started the company, we got into business, we raised about $1.5 million. Did you build the tech yourself? Yeah, I was a part of it, but we were able to raise $1.8 million. Okay. So we brought in a team of 5 or 6 people. We were still relatively cheap about our monthly expenses, but we built out the tech. We launched it the next year. Okay. So and all American developers? All American. Oh, no, actually at that time we were hiring offshore. Okay. So we had developers in India, we had a developer in Nigeria. Okay. So we were already starting to offshore. And then we launched the product and it just didn't take off and we realized we had to pivot because there was no product market fit. How did you test that? Well, we were live. We were live on a few sites. And just no downloads, no traction? No one was using us. We tried the most ridiculous things. I still remember we were on a site called Thick Ass Glass. I'll never forget it. They sold bongs. Okay. That's how hard it was to get a merchant, by the way. Right. This is desperate times. Yeah. but it was they did a lot of business. It was good. They had a good business, but we were on their site and we just couldn't get any momentum. And we were even testing things like giving 10% cash back, which by the way would not work. We knew it wouldn't work, but we just wanted to test the edges of how ridiculous we can get with our model to make it take off. Even at 10% off, we couldn't get people to sign up for it. This time it was buy now, pay later, right? So no, at this time it was the debit, the Venmo for checkout kind of an idea. Okay. So we knew we had basically a dead product. Then we started looking what's working. And just like at Passport, we just noticed what was working, which at Passport was mobile payments for parking. Yeah. At Sezzle, it took a little bit more work, a little bit more scouring. But then we saw buy now, pay later taking off in Australia. Afterpay. Yeah, we noticed Afterpay taking off. And we weighed it against a few other options. And we decided that's the product to launch. So we retooled. But just on that, Charlie, when you see a product that's working in a region and you want to replicate that somewhere else, it's not as straightforward as that, right? It's not necessarily a slam dunk. Yeah, you need to kind of understand the US market. Yeah. What do they need? And it's not the same as the Australians. Totally. But what I didn't know is I had visited Australia before for Passport. We were thinking about expanding there. Yeah. And so I kind of viewed it as like USA South, which I learned later, a lot of investors in Australia kind of view it the same way. So if a product takes off in Australia, their next leap is always to try to get to the US because they view it as kind of culturally similar. So they think it will work. And so the hypothesis was correct. If it's working in Australia, it's a good chance it works in the US.
And in the US, when you're bringing this over, it was a certain type of user you were looking at. And we'll talk about buy now, pay later. But I know there's a massive rise right now in over 50s using it. But at that time, were you looking more at kind of the Gen Zs, the millennials? You building this product in the States, who were you targeting?
I don't think we were necessarily thinking about targeting at that time. We were mostly thinking about this is a product that's working, so let's replicate it. But the group that it did work with was younger consumers. 65% female, tended to be female, a female shopper, and tended to be a young shopper, like 38 years old or younger, shopping at these e-commerce merchants. So that's who the market was. But for us at that time, it was more about this is a product that's taking off in a region that's very similar to the US. Let's try it. And it did take off.
Is this when the boomed?
Yeah. I mean, I'd already had a successful company. So I knew what a successful company like trajectory looked like. And we were smashing that.
And what are the units that you measure here? When do you start thinking, because I know you love to pin down the data. So, okay, we're going to do something similar than Afterpay in the US. You do it. But what were the key metrics you were looking for?
Well, we were just looking at our payment volume and repeat usage. And I mean, I'll tell you what, it's growing so fast, we had to fundraise. Like that's a unique type of problem. Like it wasn't like when should we fundraise? It was like we need to fundraise, or we're not gonna have money.
My goodness, yes.
Because we were doing the lending.
Yeah.
So at that time we were doing the lending, so it's like we just had to raise. And
in your team, you didn't have a banker, did you? In the founding Sezzle team?
No. I mean, I know finance, but as our CFO will tell you, I'm more shit at it. But at least I know basics, But I knew basics of finance and accounting. And I knew cash flow, and our cash was getting low.
But it's not like you had like a big department of risk there.
No. We were flying by the seat of our pants a little bit at the start on how to do lending and how to do underwriting. What we learned very soon was that the biggest way to reduce risk was just to make sure fraud wasn't happening. But not a lot of fraudsters even know about you in the early days too, which helps. You're not really a target either. I always give this analogy. It's a crude analogy, but at the start, you're more like an outhouse. Now we're a castle, but I always say you don't need to put a moat around an outhouse. No one's trying to break into an outhouse.
No, exactly. And it's also sometimes I feel like obviously risk is very important. I know you look after it now, but in the early days, you just need to get started.
You just need to get started. Yeah.
So then these are the good days at Sezzle, and you raise your Series A.
Well, we're way beyond that now. So we actually took a very unusual fundraising path. Actually, I funded one of our rounds because I exited Passport and then invested a lot of that capital into Sezzle. That was probably our Series A. And then we were trying to raise our next round. And what we were talking to venture capital folks in the United States. It was slow going. We knew Afterpay was coming to the US. They were a $2 billion market cap behemoth at the time. We were a $25 million market cap at the time. So we knew they were coming. We knew we had to fundraise fast. There were some network effects to the business. So we had to get going. Plus, you need capital. It's a lending business, so you need capital. So
time was of the essence then.
We were rushing. And at the time we were fundraising, I'd spoken to an analyst who covered Afterpay. His name was Phil Chippendale. He reached out to me. We talked for 2 or 3 hours, and he recommended hey, maybe you should think about fundraising in Australia. And he's like, by the way to fundraise in Australia is to go public. And everyone in the team thought I was crazy when I brought it up, but I was like, I talked to Phil and he said we should maybe think about doing this. And so I reached out to his bank and set up a meeting and did a non-deal roadshow and met some funds that invested in the public markets there. And they basically made it clear that if we IPO'd in Australia, we would fundraise.
Do you feel you IPO'd too early at the time, or was it the best strategic decision?
It was the best decision. I know you can look back and say we could have done it better. I'm sure we could have done things better.
Because companies love to delay it. There's always, it's sexy to be private, right?
Yeah, I think there's some of it is regulatory, I think. Yeah. But you're right, I think there's a little element of it's sexy. There's also an element of if you're public, at least in the United States at least, if you're public too early, you can't get any attention, which means it's hard to fundraise. But in Australia, it's actually kind of expected that you'll be a smaller company and fundraise these levels. So it's not as unusual. So it actually worked out, I would say, unbelievably well. We raised probably the most, in total, we raised 120 million US, which by the way is kind of chicken scratch compared to a lot of people.
For a company your size now,
it's pretty efficient. Our growth was pretty efficient, but we raised the vast majority of that on the ASX, the Australian Stock Exchange. So I would say it was really successful for us, but very unusual. Very unusual.
It'd be nice to hear more of an Australian accent at some point.
Yeah, I've not.
So obviously, happy days at Sezzle. You're listed. You're growing like hell. Buy now, pay later's taking over, and then I think it's obvious kind of what started happening. Interest rates went up. A couple of wars started, and then obviously these regional banks. It was very hard on the market. Talk to me about when you started to hit a bit of turbulence.
It actually started with something most people probably didn't know was happening. We were trying to go public in the U.S. Okay. So because we were this odd duck in the industry, people always asked us about it. Why are you public in Australia? So you never want to be seen as like an odd duck in business. It's bad for business. And so additionally, we were already filing as a public company in the United States because of archaic laws. SEC laws were written in 1932. And those laws said if you have over 3,000 investors, you have to start filing. Yeah. Well, they didn't contemplate 3,000 investors in Australia when they wrote that law. Yeah. But so we started filing in the US, doing our quarterlies, doing our annual reports. And we're like, well, we're already doing the filings. We might as well go public here and get listed, take advantage of all the filings. Well, that plan was to fundraise. So we were at that point, we had like a north of $1 billion US valuation. The smart thing to do, this in hindsight would have been the smart thing to do, fundraise in Australia at that time. But we were holding it off thinking that, we could fundraise in the US because the IPO is coming up, it'll be imminent because it's easy.
And your numbers were good at the time.
Yeah, and we were filing, so it should be easy to go public. Well, it wasn't easy to go public. It just dragged on and dragged on and dragged on. And so we missed a fundraising window. And we're a capital intensive business. We were burning at that time, 70 million that year. We burned 70 million that year. So like that was, a time where we started to realize like not going the greatest. And then we went through like some M&A processes. Eventually we merged with Zip, or Zip acquired us. But then they were burning at the time. And then I call it techpocalypse. I don't know if it really has a name, but for us it was techpocalypse. Everything was just crashing in our space, especially buy now, pay later. And for Zip as well. And the way we viewed it is like this, we have stormy seas here.
Survival mode.
Yeah, we had the two boats trying to combine and we're like crashing into each other. And we're like, let's push apart, batten down the hatches and fix things. And so we pushed apart. We mutually agreed to reverse the merger.
Were you okay at the time? These are a lot of kind of punches to the gut, right?
No, it sucked. It was horrible. I think I could handle a lot of stress, but we were burning 70 million and we basically had a year's worth of cash. So we were like, we got to fix this. And I'm old enough where I'd been through .com. I was young when I was an investor there. But in the .com bubble burst, it took 4 years to get to the bottom. So we knew basically, our view was we had to make money. Otherwise we're dead. Yeah. And so we basically started to make a ton of changes.
So this is where, before I want to move into that section, this is where I especially for a lot of the viewers here, is the comeback story, the strategy. Yeah. Did you actually go into like a situation room and plan this?
It was nonstop. I would say the situation room lasted for a year. Okay. It was just constantly, what can we keep on doing? And some of the first things we did was we were trying to expand internationally.
So you had Brazil,
India, Europe. Yeah. And then we were strong in US and Canada. It was basically our home base. We weren't even in Australia. We just fundraised there. And so we decided we had to cut those markets. They weren't showing promise anyway. They had upside down unit economics.
And it's quite interesting in fintech. And when I started kind of building teams in the early stages in London, they just automatically hired a country manager for Germany, for Spain, whatever. That's common. And then it's like, why not just dominate one market? Which I think this strategy is obviously proving makes a lot of sense.
Well, if the capital is infinite, keep on expanding. But that's when we realized the capital is not infinite. Yeah, we have a problem here. So we went from it to show you the magnitude, and we made a lot of the right decisions along this path. But to show you the magnitude, we went from 580 employees worldwide to about 240. Okay. More than a 50% cut of our staff. And most of it was cutting our international expansion. And then we made a lot of tough decisions in the United States. We had a layoff. We cut a lot of costs. I mean, jokingly, we even cut like a bevy. It was a bevy. It's the name Bevy. This like carbonated water machine. Like it only costs $500 a month. We're like, we're getting rid of it. I even made a joke about it on a quarterly call. Like that's how serious we are about cutting costs. If we're not using something, it's gone. So we cut a lot of costs, and then we really started to work on the revenue side. That was the key, the revenue side, and innovating and continue to innovate.
And that is my final question before moving to the section. Where was it after you've done all this cutting that you just started nailing it in the US? Like, where you must have found a segment that worked, or there was a product that you released.
Yeah, the product was our first subscription product called Premium, which basically the idea, it's always good to listen to feedback from your stakeholders. Yeah. The key stakeholders for us were the consumers, our merchants, and our team, and our investors. But the consumers were basically telling us, Sezzle, we love your product. And they do love our product. Our NPS scores are through the roof. Yeah. But we always watch the channels of feedback, and a lot of the channels are, I love your product. Why aren't you at Amazon? Why aren't you at Walmart? And we're like, we're working on it. Trust me.
Give me time.
Come on. But it wasn't going fast enough for the consumer. So one of the ideas within the team was, let's, in our app, allow consumers to shop with paying for our product at those locations, but they'd have to basically be a part of a subscription. The subscription had other benefits, but one of the benefits was the ability to shop at those locations and use paying for. And that product took off. So Premium started to take off.
And what was it? Walmart,
Well, the key, the big merchants that people really wanted, it's like the 80-20 rule. It's Amazon, Walmart, Target. But we had 300 of the top merchants in the US. Best Buy, Lowe's, Home Depot, like you name it, like Hotels.com, places, Instacart, places people wanted to use our product.
So the users were naturally going there. They just needed a better product at checkout.
Yeah, they love the paying for product because it's like, this purchasing power, but also budgeting. So they loved the product, but they just didn't have the access to using the product at those sites. And we gave that to them with Premium. But then we kept on having people still complain, like in the feedback, I want to use you in more places. I want to use you everywhere. And so 12 months later, we launched Anywhere.
So they could just write like wherever they want.
We provisioned them a virtual card in their Apple Wallet or Google Wallet. They push it to their wallet. They pay our subscription fee, and we move them from Premium into Anywhere. They get a lot of the same benefits, and they also get this virtual card now that they can tap wherever they want to use it. And so those two products really have carried us for like the last couple of years.
Cut costs, build an awesome product, stabilize the business.
Exactly. And we kept our operational expenses basically dead flat over like the last couple of years. And while our gross profits rose.
It's hard to keep that discipline, right?
Yeah.
And that's
how we got connected.
Absolutely, which brings us nicely to our next section, which would be workforce strategy. So you mentioned you cut the international locations and you are a remote first business, but you centralized in the US. You naturally were always building teams in India, as you mentioned before. Why now Latin America?
Well, maybe it's worth going back in my story a little bit because I've always been a believer in offshoring. Okay. So at Passport, I lived in Bangalore for 6 months to start our first development team. Yeah. So I lived there. We hired like 10 developers in India. And that was the team that basically helped us build our mobile app and our systems. So I had success with it before. And then at Passport, at Sezzle, we were doing the same. We had a team in India. But we started to see challenges with India, actually, especially with our team as it was scaling up. India, the cost benefit had been shrinking a little bit because there's so many people hiring in India. But there's also a huge time zone challenge where basically people have to stay up at 7 o'clock in the night in the US to talk to their teams, which is difficult for some people. And so our head of people at the company, Jasper Helling, and I we were chatting last year, like in October. And I was like, Jasper, I really want to maintain an offshore strategy, but we need to look elsewhere. Like, what about Latin America, South America? And he's like, Charlie, I've been trying to push this. This is great. I'm like, well, maybe I didn't hear from you. Like, it's awesome. Like, we were basically completely like-minded. Like, okay.
Which is quite interesting because Jasper is this Dutch, American, lived in Switzerland, head of people for Huawei, super traditional. And then it's like...
I just love to hear that he wanted to support this. So I was like, well, we're the two leaders in this one, Jasper, let's go for it. And so we started to research where to do it. We knew we wanted to go to Latin or South America. And so we started to look where to do it. And we already had an offshore team here through a third party for our customer support.
Yeah.
Here in Bogota.
Parties, don't you?
Yeah. here in Bogota. And so we tried to move that team elsewhere, I think back to India to save money, and it didn't work out well. And we were like, wow, okay, something like clicked. Maybe the talent in Colombia is pretty good. And then we started to read some reports on offshoring and where to do it, where to do offshoring.
But your investigation was really interesting because you did read reports, but Jasper just started talking to people.
That too. So you have to do it all.
The same. It's just kind of you really kind of understood the local culture here,
and you have to go and you have to visit. And that's why I lived in India for 6 months to really understand what we were getting into. We've come to Bogota quite a bit to understand what we're getting into and to understand the culture here, et cetera. But first it started with just the simple research reports, calling people. And then it was also interesting. There's some ties. I live in Puerto Rico in the winters. And so it's a 3-hour flight to Bogota. It's a direct flight. Jasper had a place in Panama City, easy flight for him to get here. And we're like, man, everything's kind of pointing to Colombia. Let's try Colombia. And that's when we first reached out to you.
And in terms of kind of my next question is, Colombia, obviously, the slogan is the only risk is wanting to stay. But the reality is it is a risky country. It's emerging markets. Politically, there's still issues. Talk to me when you went to your board and, when you started kind of talking about like, we're actually thinking of building quite a big workforce there. Any
Well, no, at the start we didn't. It was more internally to the team because we didn't have to bring it up to the board because it wasn't like we were risking a lot. It was more like just testing the waters, like a slow walk into the waters, which is always a better way to approach things, I think, if you can. And so it was mostly just trying to get buy-in from the team on. And so there were some easy wins for us, but we just went after the easy wins.
And it makes sense, like what you said. I think you guys nailed it. And the strategy is let's go slow, let's test the waters, let's see the performance, and then scale. Exactly.
Yes.
But one of the problems most of my clients have, and I'm curious to see how you got through it, is you guys are an American business. The background of your US engineers have been to Ivy League schools, they've worked for Fortune 500 businesses, the best startups. All of a sudden it's like, guys, we're not hiring in the US. We now need to look at engineers from Los Andes that work for local companies. Talk to me about how that conversation went.
Well, it takes time. You have to create internal buy-in. I mean, really, when you're an entrepreneur, especially when you start things from the ground up, you always kind of understand this. You basically have to sell everyone. And people,
it's so tiring.
You know about it, but
I'm getting tired of that now.
A lot of people don't realize that. Like, you have to sell people you don't usually think you have to sell. Like, early days in a company, you have to sell suppliers. These are people who are going to make money off of selling to you. You have to convince them that you're worth their time. So you're used to selling. And I think an important thing in running a business always is getting buy-in from the team, because if the team believes in it, they'll understand it. And so we basically took time to explain like how important of an initiative this was to helping keep our costs down. I always tell the team, my job is not to save the USA. My job is to save Sezzle employees in the USA and to do a great job by them. So
that's quite a blunt way of putting it as well.
Really, that's our universe.
But it's the reality.
That is our universe. Yeah, that is our universe. So our universe is Sezzle USA, or Sezzle, which includes USA employees. One thing I do believe, and I see other companies do this, you break a massive social contract, in my opinion. I would never in a million years do an offshore or idea and do a layoff just for the purpose of cutting costs. I think you break social contracts that can never be recovered. So the way we talked about it with the team, which was the truth, we're not going to ever do a layoff in the US just to hire offshore. That's like, first of all, it's just disgusting, quite frankly. So the whole point was, if we can lower our operational expenses and keep them lower, it's more for everyone in our universe. We can treat everyone in our universe better bonuses, better benefits, etc. Not just for Sezzle.
And they stayed so long with you, so loyal to you. They rode the wave with you. They deserve to have a job, right?
Totally. I mean, one thing I always say is, if you're at the end of the journey and you want to have the party, it's not a great party when it's party of one. It's not a lot of fun.
Yeah, sounds like my parties. Charlie, obviously, even though you're so laid back and a lovely person, you are, you've got a high profile job, you've got a lot of responsibilities. You still make the effort to travel here once a month. You have your meetups, you have your happy hours. And one of the most special things I think in my career was a couple of weeks ago that we hosted the US Sezzle team, coming here to Colombia. And we were, there was no Colombians and Americans. There was no us and them. It all just seemed kind of beautifully balanced. That was no accident. That's what I know you and Jasper have been working so much on. But how was that achieved? Because sometimes, we have clients that come here and they're just so disconnected from their team here. And also just in general, like there's no kind of us, it's them and us.
Yeah.
Talk us through that, how you build that unity.
It's funny, I guess I don't even know if I really think about it consciously. But really, I kind of just view it as when you're joining our team, regardless of how you join, contract or whatever, you're part of our team.
Yeah.
And I think when you join the team, we disperse employees throughout different teams as well, and they create their camaraderie. I mean, who came down here 2 weeks ago is our product team and our people ops team. And you could tell, they had better connections to people than I did, even though I'd been down here more, because they've been working with them even remotely. So you could already see they already had connections because they've been working a lot together. But I just feel it's important so people understand it's one team. This is one team, and we're all going to be working together, which is why we want to promote people traveling to Colombia, having Colombian team members come to the U.S. When we have offsites coming together. And it won't just end in Colombia for us. I mean, we're looking to expand in other places as well. But
under the same philosophy as well,
under the
as
same
like
philosophy.
one company together. Yeah.
I mean, when we first started the company, we had, some of the early co-founders in the company. Emmanuel lived in Nigeria. Rishi lived in India. I mean, we were a tight family then. And it was, one guy in Nigeria, one guy in India. I mean, so we're expanding the globe. So I just think that's always been the philosophy, always been the mentality. I know what you're talking about. I think that definitely does exist. This whole that's the team in Colombia. There's a wall. I think it's just weird. To me, I think that's weird. I think it's in life more fun if everyone's kind of working together.
Yeah, exactly. And the modern workforce, the borderless workforce, that's the way it's got to function. And last question before we move on from this section is that even though it provides a lot of efficiency, it's also a lot of fun. The market's obviously reacting well to this strategy. There's no doubt that socially speaking, Sezzle's doing something fantastic locally. Not only because the jobs they're getting, but I think most importantly, it's allowing local people to work with managers that maybe that talent doesn't exist here yet, and that increased the knowledge, let's say acumen here, so much. And that is really where, I have this chat a lot in Colombia, is that how do we increase social mobility? And unfortunately, it's either more money in people's hands or more knowledge in people's brains. Yeah. What's your opinion on this? And, what do you actually think Sezzle's doing to society being here?
Here in Colombia?
Yeah.
I mean, I think a lot of companies are doing it. We're doing it, of course, too. But I think it's just, you're right. The way Sezzle works, we're a meritocracy. I don't care where, you went to school or what sort of level of culture you're at or whatever it might have been. My goal is, or my thoughts are, if you're able to join the team and make an impact, we're going to reward you. We're going to treat you well. And that creates a tremendous amount of mobility. Like if you're, just like my parents really, if you find a great job or a great position, I think you can move within our company, no doubt about it. But I think just generally, the more Colombia embraces business, which I get that sense that business is important to the culture here, and working hard is definitely important to the culture.
People naturally here are very entrepreneurial.
Yeah, I can sense it.
And they're naturally very good salespeople.
Yeah, and hard workers.
And very hard workers, yeah.
I think that's really the key. And so the more people embrace that, I think it's coming, by the way. I think that remote work has come here to stay in the United States. Yeah. People don't want to come into the office, where it's going to create some challenges for U.S. workers. I don't think people necessarily realize it, but when you don't come into the office and don't want to come into the office.
But that's a great point. I think U.S. workers, UK workers, there's this war on talent. People are getting arrogant and people are getting complacent.
A little bit.
And all of a sudden now, if they're starting to get competition from their colleagues in emerging markets, they got to raise their game.
I think this goes back to when I mentioned, when I graduated from business school. Yeah. That was the last time there was a bad market. That was 15 years ago. 15 years of people joining the workforce have not experienced a bad market. So I think that there's this element I'm deserved it or whatever it might be, across just more globally, or in the US, I'd say. But the problem with not coming into work, not coming into an office, that was kind of your advantage. If you're working remotely, well, now you're competing against the world. Because that's why we first hired Emmanuel in Nigeria. I still remember, Emmanuel will remember this. I remember our first conversation. I was like, Emmanuel could be in Wisconsin. It feels like I'm talking to an American, and he was in Nigeria. Yeah. And so if you're working across a remote workforce, it doesn't necessarily matter where you are. And so my viewpoint is we can pay people better in a remote area for us, like Colombia, make them super happy, but we're also super happy as a company because we're saving a lot of money. That's win-win.
Tell you one last point in this that I also find truly super exciting is that I've noticed that a lot of people, let's take Colombia for example, a lot of let's say potentially the 1%, they move to New York, they move to the UK. Yeah. Imagine if once we start getting momentum with more companies like Sezzle, we can actually bring those folks back home.
I think you're spot on with that, but I think
that's another talent pool that no one's talking about.
But there's going to be a big tidal wave of jobs coming to South America, I think. I think there's this whole remote workforce. More and more is going to come. So maybe even if you can't get the 1% to come back, the next 1% doesn't leave.
Yeah.
They'll just stay because the jobs are here.
Exactly. So exciting times for all of us. So Johnny, just going back a bit to the buy now, pay later space as we're starting to close. During the post-pandemic, it was something that skyrocketed, as we both know, and then the effects and challenges of regulation are coming in. I'd love to get kind of your viewpoint on this and what's working, what's not working, and what would you like to see?
Yeah, well, there's definitely during this tech apocalypse, we kind of looked ahead of us. We're like, it almost felt like we were in a big pit, and we had to basically claw our way out of this pit of a lot of bad decisions that we had to unwind, but then also just what we had to do to build the profitability. But then we always knew regulation was coming too, which is, personally, just maybe even politically, I'm not a big fan of regulation. I just think that it hurts innovation, honestly. But at the same time, we'll comply. That's my viewpoint too. It's not like we don't fight it.
You have no choice, right?
Yeah, you have no. In my view, fighting the government is like screaming at the wind. You're not going to stop it, So just go with it, And so our viewpoint was, if regulation does come out, we're going to do it. We're going to make sure we comply, and we did. Basically, as the trade winds came and told us what was happening in buy now, pay later regulation, we adopted it right away. We didn't even debate it at all. We just knew we had to adapt the product. Customers didn't love it.
Particularly what?
Well, I'll give you a few examples. Our product was easy, it still is pretty easy to use, but it was super easy to use. And customers knew what they were doing. Yeah. They were tapping their card, $100 purchase, it's split into 4 payments of $25.
Pretty simple.
Tap, tap, tap. Pretty simple. They understand what they're doing. Well, regulation required that every time they do it, they have to pre-approve and hit a disclosure.
Yeah.
Yeah, the customers hate it. This is just it reminds me of the whole accept cookies on every website.
Yeah.
Has that helped you?
Not at all.
No, it's been a pain in your rear end.
Yeah.
So same for me. Accept cookies. I've had enough of this. But now, so the customers are complaining to us Sezzle, why did you add that? I'm like, well, we can't say, go talk to your government officials. That's why we added it, because they required it. But we did it. And then what was another one?
Does it really make people think twice before making a purchase?
It does. We dropped volume by 10% probably on a like-for-like basis, because of that. So it does affect usage. It was more friction. Some people just decided they didn't want to use it anymore. And then another one that came up recently was statementing, requiring statementing. Well, I can't anymore. We have too many reviews, but I used to read every review. Not a single one ever asked for a statement. Right. Because you could use our app and you can always scroll through your history of transactions. But regulators required statementing, which is sending you a PDF of your transactions for the month. We were required to build it. We built it. We send emails with PDF statements. Do I think it helps customers at all? No. But at the same time, we're not going to fight it. Regulators want it.
It's just more bureaucracy, more paperwork.
Yeah. But it also hurts the next company from coming, which, in a way, it helps us. I tell people too, because, as much as you might want to complain about it, I don't think it helps. But if there's a burdensome regulations in the space, it also makes it hard for the next competitor to come, which is why I don't like it personally, because I'm an entrepreneur. I like the ability to build something.
And that's a great point, because I guess my next question was, do you think buy now, pay later products will ever overtake credit cards in online purchasing? So you've just mentioned regulation will stop it, but do you genuinely see kind of the future in this?
We're going to take share. I'm not sure where it ends, because we know that customers of ours have credit cards, but they prefer to pay with buy now, pay later, pay in full, and they pay us back with a debit card. So that tells you who's losing the business. It's credit cards. And so I think as we gain more and more share, which, I think buy now, pay later, pay in full is 6% of online payments right now in the US. In Australia, it reached 21%.
Wow.
So we think there's room to grow. Do I think it ever overcomes credit cards? I'm not sure. Time will tell, but we do think it's going to grow.
So you're only just scratching the surface right now.
Yeah, we think we're part of a growth sector, and our goal is to grow with that sector, but also to innovate, to gain share of the sector as we grow.
John, you obviously mentioned you've developed products, you've now been talking about the subscription. What is the future of Sezzle now for the next 5 years? What are you going to become?
Well, we want to really start embracing shopping features, because if you look at our customer base, it's mid to low income customers. They're stretched paycheck to paycheck like a lot of Americans are. They view our product as a great product for budgeting, plus purchasing power. And we think we really kind of built out the complete suite of paying for. And so now, like, how do customers think of Sezzle? They think of us as financial services. They think of us as shopping. We really want to build out shopping. And what I mean by that is what would help a mid to low income customer? Couponing. If I can automatically find you a $15 off coupon as you're checking out through Sezzle, you're going to remember that. I mean, I'll remember that. I'm cheap. So if I find $15 off, yeah, wow, that app wanted me $15. That's great.
Yeah.
We'll also help you find better prices. So you're buying a pair of Nikes online for $95. We found it for $87. This other site, you want to click here and check out there. We'll also help you speed up your checkouts. We know all your information. So if you're checking out at Nordstroms.com, pop. We just fill it all in for you. You tap. You're checked out. Super fast checkouts. Shopping lists. That's another thing we can do. Browser extensions on mobile phones. So we can
shopping in one place.
Yeah, basically you view Sezzle as a shopping app as well as a paying for app. But paying for is actually kind of a shopping product. So it's really starting to see us more of a shopping app. And then also the thing we really like to latch on to, which I haven't touched on yet, but these are young customers and they tend to have no credit score or lower credit scores because they're young customers.
How young?
Well, the average, that 70% of our customers are under the age of 38. So relatively young. And they have lower credit scores or no credit score. And so we have the only credit building product in the space called Sezzle Up, where it's free for customers to join. And then we report on your activity to the bureaus so you can build your credit score. It works awesome. We're the only ones that do it. I just think it's the right thing to do. But my view is, or our view as a company too, is let's embrace more credit building activities too. Because we know that this will help customers. So what else can we do with credit building? We can do secured credit cards, credit builder loans, reporting on your rent payments for credit building. Just what else? What other products can we offer to supercharge your credit? So young person financial services, it doesn't have to be young, but tends to be. And then shopping. Like that's the next 5 years. Building out those and then supporting our buy now, pay later products.
That's truly fascinating. There's also kind of allowing purchasing power for people that didn't have it before.
Totally. If you don't build your credit score up, it's hard to get an apartment. It's hard to buy a car. It's hard to get a house. So it really is important for young people to build that up.
Fantastic. Charlie, the closing section is actually, having someone like you here, I think, and, just hearing your story, the turnaround, it's about leadership, right? And it's about kind of guiding the ship when the wave is about to kind of destroy you. So let's, very quickly, just a fire question. What makes a good wartime leader?
Oh, well, you probably have to be good at peacetime too, a little bit, because when the war hits, you want everyone behind you instead of fleeing.
Yeah.
So I think this is how I generally try to lead. At least I try to lead. I think if you're a captain of a ship, you want to talk to your team a lot about what's going on. And so like when you're going through product decisions or strategy decisions or whatever it might be, you talk to your team a lot. And then my point is like, you ask your team, should we go that way or that way? And if everyone's pointing that way, unless you've got a really good reason, you better point that way. Okay, we're going that way, And then that I think sets you up for the wartime, where if everyone's pointing that way, but you are dead certain that you need to go that way, you can pull that off. But no, we're going to go this way. And that to me is like the wartime leader. If something like really you're damn certain, you have to be damn certain, we're going to go the other way. Or, it may not be the only one. You're the only one thinking that, but let's say you're in the minority.
You got to have the conviction
You got to have the conviction to say we're going to go that way. But you also have to be ready. If you point the wrong way to the other team enough times, they call it a mutiny.
We'll send you back to Australia.
Exactly. So that's why you have to be really cautious about when you use that. But we did have to do that a few times. No doubt about it.
So one thing that I want to touch on here is another closing question, was that you've had to hire to get the buy-in from the US guys. You had to hire, let's say, the top 1% to 5% of engineers here in Colombia.
Yeah.
And you have this thing that you don't like engineering leaders that don't code.
Yeah, we love it.
So your engineering leaders have to code.
Yeah.
Talk me through that, because that's a structure that's also, some companies just have the engineering leaders just directing or reviewing code. You actually want these guys.
Yeah, I think, there's a diagram online. People have probably seen the diagram I'm talking about. It's like, who's a great leader? It's like the person at the front of the line pulling the chariot with their team versus the person in the chariot with the whip. That's the whole point. If you can't code, like for that type of a role, if you can't code or you can't do the work and roll up your sleeves and do some of the work, first of all, I think it's bad leadership just in general, because you should be pulling with your team as much as you can. At some point, should you be pulling? No, at some point, if you're leading 30 people, 40 people, yeah, you don't have any time to code it. We get it. Yeah. But you also earn the respect of your team. If they see your code and see you have the right strategies, right, you know how to implement. Another analogy is like, would you trust the cavalry leader that couldn't ride a horse? So that's the point. Like, so if you want to be a great leader or want to have great leaders, they have to be great horse riders to show their team that, yeah, I know what to do. So that's why we really look for that in terms of engineering leadership. Someone that knows how to code, likes to code. Are they doing it all the time? No, but if they want to, they actually kind of like it and kind of get pushed out of it.
So that's a good company culture as well. You know, you guys are quite flat, and it's like, it doesn't matter what your title is, we're all in the same direction. Yeah. And last point on leadership before closing, I noticed you do zero micromanagement. And I also noticed that you would raise the focus normally when we catch up in Bogota in a couple of initiatives that turn the needle. Talk me through that kind of process. Talk me through like how you identify something you need to focus on, because I know that you're focused on that, you're razor focused, and you don't let any kind of, let's say, BS distract you. So just walk me through that.
Well, I think, you have to focus where you need to focus, where you think important initiatives are in the company. And I don't think everyone in the company would agree. I'm not a micromanager. But I think there's only so much you can do. There's only so much you can do. So I always tell the leaders in the company, when you're hiring, you should be hiring people that are better than you, for you and your team to be like your lieutenants. And then the whole point is, if you keep on hiring people better than you, you can give them responsibilities and take them off your plate, which allows us as a company to scale. That's the only way you can scale, is you're able to offload off of your lap onto someone else's lap and trust that they can take it. And if you're hiring people that are better than you, you really trust they can take it. They'll take it and they'll improve it. And so like I always think about it as the company is getting better and better and better, I'm getting more and more bored. And that's a good thing.
You're a masochist.
Yeah, because if you're getting bored, it's not maybe good for me, but it's good for the company. And then if something does happen, if the proverbial shit hits the fan, you can jump into it and actually help focus and help make sure that we solve the problem, because you've got the time available. If you've got 20 things on your plate and you didn't distribute or offload those things, you're in a world of hurt when something comes. So I think that's really the whole point, is try to lower your load so you can focus on a couple of initiatives. And then if things come along, then you also have the time available to help.
Oh, that's amazing. Right now we're in 110 employees here in Colombia. How many are we up to?
I think north of 100 for sure.
North of 100. We achieved that in less than 8 months?
Yeah. Basically, the initiative started October. The first thoughts toward it, I think we first connected in December.
Yeah.
Or maybe it was November. I'm not sure.
Something like that.
Yeah, somewhere around that time period. And then it didn't start like 10 per month. It was like maybe a couple people the first month, and then 5 the next, 7 the next, and just like a startup. Like we started just ramping up.
And I think, from what we saw at the event, the retention has been low, people are having fun. And I think, first of all, thank you for trusting the region, trusting us. And I think it's a great case study of, maybe observing the masses and doing the opposite, and, doing something that works. And thank you so much. You are our first guest. We lost our virginity to you today in terms of the first guest at the English Breakfast show. So, guys, thank you so much for joining, and we look forward to having you in the next episodes.